AMD just crushed earnings expectations, and yet somehow, Wall Street didn't see it coming. The company reported stronger-than-expected revenue, beat earnings per share estimates, and showed surprising strength in the very segment analysts have been most skeptical about: AI and data center compute. For months, the sentiment around AMD has been that it was lagging behind, playing catch-up in a space Nvidia has clearly dominated. But this latest earnings call suggests that AMD isn't just surviving the AI wave, it's actively building a foothold within it. It's worth stepping back for a second and asking why analysts miss this. Part of it, quite frankly, is that AMD has spent the past year struggling under the shadow of Nvidia's explosion. From investor excitement around CUDA and custom silicon, to Nvidia's dominance in generative AI infrastructure, AMD has been largely treated as an also-ran, a strong chipmaker in traditional spaces like CPUs, gaming GPUs, and embedded systems, but not a serious threat in AI acceleration. But AMD's MI300X GPU platform is now shipping and scaling. The company revealed that major customers are adopting the architecture, and demand for its AI-specific silicon is ramping faster than previously anticipated. This matters, not just because it opens up a new revenue stream, but because it shows AMD finally has a competitive offering in a market that has gone from niche to non-negotiable. Investors were also impressed by the company's margin stability. Despite high development costs and competitive pressure, AMD managed to deliver profitability alongside growth, something not all chipmakers in expansion mode can claim. Their data center segment, long under scrutiny, has shown signs of becoming a true pillar of the business, not just an aspirational roadmap item. So now, the natural question is, does this bring AMD into true competition with Nvidia? The short answer is no, not yet. Nvidia still holds an overwhelming lead in AI GPUs. Its CUDA ecosystem is entrenched, its developer tools are widely adopted, and its dominance in high-performance computing is backed by real-world deployments across hyperscalers, research institutions, and enterprise AI stacks. But AMD is no longer on the sidelines. The MI300X, paired with their increasingly integrated product suite thanks to the Xilinx acquisition, gives AMD something it hasn't had in years: a real, multi-layered platform that can scale across compute types and workloads. And it's not just about the chips themselves, it's about optionality. Nvidia has made its money betting on one dominant approach: GPU-based AI compute with proprietary software hooks. AMD, on the other hand, is building out flexibility: CPU, GPU, FPGA, and AI accelerators that can slot into a variety of workloads and price points. That approach might not win headlines right away, but over time, it could unlock markets Nvidia doesn't serve directly or effectively. This brings us to the stock. After the earnings release, AMD popped. That's no surprise. But is it still a buy? At these levels, the stock still trades below Nvidia on a valuation basis, with a forward price-to-earnings ratio that leaves room for growth if the AI business keeps gaining traction. For investors who missed Nvidia's historic run, AMD now represents the closest thing to a second chance, a way to gain exposure to AI infrastructure without paying nosebleed valuations. But it's not without risk. AMD's software ecosystem is weaker, its customer base for AI is smaller, and the capital intensity of competing in this space means margins could come under pressure quickly if execution falters. There's also the macro picture to consider. While demand for AI chips is red-hot, the broader chip sector remains cyclical. Consumer PC sales are still shaky, and enterprise spending on new data center builds is being closely watched. AMD's strength in embedded and gaming can help cushion volatility, but its AI story needs to keep delivering quarter after quarter to justify any re-rating of the stock. Still, this earnings beat represents something important. It's not just a short-term bump. It's a signal. AMD has been written off too many times before, first as a poor cousin to Intel, then as a laggard in GPUs, and most recently as an irrelevant player in the AI arms race. This quarter pushed back on that narrative. It showed that AMD is not only catching up, it's thinking strategically, executing at a high level, and positioning itself to be more than just a backup to Nvidia. It's tempting to frame this as a simple binary, AMD versus Nvidia. But the more useful way to see it is this: Nvidia is the market leader. But AMD is now the one to watch. Whether that turns into long-term market share gains, or just a seat at the table, will depend on execution. But if Wall Street continues to underestimate AMD's AI potential, as it clearly did this quarter, we may be in for more surprises. Thanks for watching. If you found this breakdown helpful, or just appreciate stock coverage that's thoughtful and honest, Make sure to like, comment, and subscribe. Let's keep following the silicon stories that are shaping the next generation of tech.